I want to tell you just a little bit about Gray Capital before we get into the fund, including that our co-investments are well above the industry average, as low as 10%, but can be as high as 20% into all of our projects that we pursue here at Gray Capital. We feature monthly distributions and industry-leading reporting as well as investor servicing. As an LP myself in well over a dozen commercial real estate private placement investments, I understand good reporting, timely K1 delivery, and the differentiation that premium investor servicing can make, especially dealing with high net worth investors, institutions, and family offices. Our track record speaks for itself. We've had well over 10 full cycle exits with an average total IRR of just under 30%. But typically we're long-term holders with many of our best projects still under operation and being self-managed by Gray Residential, our in-house property management company. Right now there's a window of opportunity emerging. There's a sharp decline in new apartment constructions with starts in many markets down well over 50% year over year after a peak supply wave of the highest rate of new supply in almost 40 years in the multifamily industry. And then a persistent housing shortage of up to 7 million housing units, even though we have been delivering so many new housing units in the form of apartments and single-family homes. We are not catching up as the population continues to grow. And the demand for apartments has never been as high as it is today. And that fact is not changing anytime soon. So the thesis behind the fund: we're going to target 7 to 10 stabilized cash flowing multifamily properties in growing markets in the Midwest. We're going to acquire these assets from distressed or over-leveraged owners at attractive valuations. These properties will be acquired well below replacement costs and again, fundamentally strong in supply-constrained markets. There's an opportunity to not time the market, but take advantage of clear trends, whether that is in a wave of loan maturities that will be peaking near the end of 2025 throughout 2026, or those factors of extreme supply reduction, creating positive headwinds for further rent growth throughout the hold period. What's behind it? Gray Capital, we are targeting some of the most resilient and demand-driven multifamily markets in the United States. The Midwest fundamentals are set up for a solid multi-decade cycle of growth as the reemergence and the renaissance of manufacturing in the United States takes hold. As we are building new battery plants, power facilities, data centers, and advanced manufacturing, the Midwest with low cost of labor, relative affordability, and the workforce that is trained for decades is the prime region to take advantage of this opportunity. And it's not theoretical. It's been happening for the last 5 to 6 years, and we are still in the very few first innings of this shift to the Midwest and seeing great growth opportunities. So much attention has been paid to the Sun Belt or the primary and gateway markets where there is more than ample liquidity. The Midwest has been overlooked, and we're going to take advantage of that huge inefficiency in the market. By acquiring stabilized, market rate institutional size assets during a period of dislocation sets us up for a huge advantage as Midwest regions become more institutionalized and those large buyers begin to shift to the Midwest. Rent growth over the next cycle is forecasted to be well above the last cycle average as inflation is higher than that period of time and supply is falling off a cliff similar to levels that we saw during the Great Financial Crisis. We're targeting 20 to 60% value discounts from peak market valuations, giving us ample headroom of our capital stack. Our disciplined underwriting process, paired with in-house property management that is tech-forward, AI-enabled, and also focused on in-person customer service, allows us to further drive value to renters, allowing us to push rents even further beyond just physical improvements. We have a preference for long-term fixed-rate financing. That's one of the reasons why Gray Capital is not facing any stress throughout our portfolio. Again, we underwrite diligently, accurately. I like to say conservatively, but everyone says conservatively. I think we underwrite accurately. And the fact that we have never had issue a capital call is a testament to that fact.